notice on that stock as well. But let's do one thing. Let's talk about Alembic Pharma now. The stock has been surging in trade on the back of a steady Q3 performance. The margins have recovered sequentially and there's an improvement in the India business. R.K. Baheti, who is the CFO of Alembic Pharma, joins us now to talk about that. Mr. Baheti, thanks a lot for joining in. If you can tell us, first about the operational performance, which has been very strong. Your margins have moved up to about 16.5%, which is a 4-quarter high. Can you tell us what led to this kind of improvement? Has pricing pressure eased? And what is the sustainable margin band that Alembic Pharma can eke out in FY25?
Yeah, thanks, Sonia. Thanks for putting Alembic Pharma on your prestigious channel. Very valid question, very good question, actually. So last couple of years, we were suffering from steep price erosion in US market, in US generic market. On top of that, our facilities were pending approval because of disruption in travel schedule of US FDA. So year 23, calendar year 23 has been good for us in the sense that we got all our facilities inspected, passed. We have got EIR for all the facilities. So some of the new investments which we have made in injectable plant and in our onco plant has started now commercial production. Though initially at a little lower scale, but at least they have started commercial production. Products have been approved. We have started launches in US market. So that has been very positive for us. Of course, the margin improvement is a factor of, okay, let me put it this way. India blended business is more stable business. The margins are predictable. Growth also is more or less predictable. As long as you don't goof up. And we have done some good work at the field. So domestic business has, actually it is outperforming the market in most of the categories. And the margins are good there. But the improvement at company level margins is largely driven by US generics, where prices have stabilized. Our new launches has given us some traction. And this improvement, also we did a cost reduction. You would have noticed that R&D, which was almost 13% of our revenue at one point of time, is now about 7-8%. So that has also given us some space for margin expansion.
So just to conclude this point on margins, right? You're saying that costs have gone down and there's an improvement in the US generics business. Has it all been factored into your margins at 16%, or is there scope to raise it further? And if yes, what would the band be?
There is a scope for raising it further. And why I'm saying this, without predicting future, because markets are so unpredictable. US markets are so very unpredictable. So without predicting future, why I'm saying this is further improvable is our new facilities. All my expenses are being charged to P&L, whereas they still are at a fraction of their capacity utilization. So once they have better capacity utilization, more products in the market, more revenues, the margin improvement will come automatically because overheads are all covered. And anything beyond this should directly add to the margins.
All right. Hi, good morning, Mr. Baheti.
This of course goes with the assumption that the US stays this way or improves further. It doesn't go down.
Got it. All right. Hi, good morning, Mr. Baheti. Nigel on this side. So taking that kind of an assumption that US doesn't see further pressure and the international business, ex of US, it sees growth. Domestic business is looking healthy and your reduction in R&D cost. A couple of brokerages are estimating that you will be at around 20% margins by FY26. Do you think that's possible? Point number one. And point number two, the US business has been delivering a quarterly run rate of around that $50–55 million per quarter. What is the range we should be working with for the coming quarters?
So, as a policy, we don't give guidance because giving guidance, particularly when 60% of your business is US driven, is very risky, I would say. But this margin improvements, as has been talked by people, is achievable. R&D with cost will continue because see, R&D cost, we are not sacrificing future growth. We are still investing in injectable. We are still investing in onco products as far as R&D is concerned. Where we have reduced is derma because we have covered our space. Almost all of our products are now ready for technology transfer and then commercial production. And we have also reduced our R&D investments on oral solids. because the margins there have really gone down. Other investments are continuing. So, but R&D would be still 7-8%, and with R&D 7-8%, I think a 20% margin in couple of years is doable.
Got it. And what about the US business, the run rate that you were going to give us?
That is that's the almost impossible to predict. But I think what I can say is that, like in last couple of years, we have launched 20 new products, and we'll continue to launch about 5-6 products every quarter. That is 20 products. Now, if these products get a traction and the prices remain stable, then I think we should be doing a good US business.
All right. Mr. Baheti, hi, good morning. The R&D, won't you have to, once all of this happens, right? I mean, there's operating leverage which kicks off as capacity utilization increases. That's the base sort of assumption why you're sounding optimistic. But isn't R&D a critical aspect? I mean, wouldn't you have to raise it back up? As you said, it's come down from 13 to 7% now. But won't it go up again? Won't you have to?
Yeah, no, it's a valid point. But the next level of R&D investments would happen only when we go for a branded product or a discovery product, and which will need massive R&D. So for that, company would have a different strategy, either of partnership or sharing of cost or some such thing. For the existing generic business, and that's what I clarified, for the existing generic business, I think this R&D level, 500 crore annually, should be good for us.
Okay, what about the API business? That has been on the weaker side. In fact, I think year on year, the API business is down double digits. Has that been the case with the entire industry? Do you see things improving? And what is the way forward? What's the run rate? Because I think it slipped below this 300 crores of sales after 4 or 5 quarters.
No, very right. So, I mean, assessing any business on a quarterly basis is not probably correct. These are business, these are supplies to other formulators. So it also depends on how they build up their inventory and how they stack up their production cycles. But I think API business, we are most optimistic about, and we have been saying this for last few years. Last few years, our CAGR in API has been almost 15%. Base is quite good, and we'll continue to have a 7 to 10% growth. Even in the current year, if you look at the YTD number, we are 7-8% up from the previous numbers. So I'm not too worried, and we remain optimistic on API business. Yes, there has been some pricing pressure on API business also. See, when the generic business is under pressure, some pressure on prices also spill over to API, which is natural. So with the generic stabilizing, hopefully API business will also improve.
So, Baheti, for FY25 on top line, overall top line, I have a broker's estimate. I mean, they are looking at about, they're modeling at about a 12% growth in top line. Now, would that, are we in the, is the analyst in the ballpark?
I would refrain from saying that, but okay, they are not way off the mark.
Okay, around 12%, but without not being specific. Got that.
Yeah. Okay, all right. And how is your balance sheet looking? I think you have a small debt of around 600 crores odd. Any plans to repay that?
So we have been paying, actually, the cash flow, the last year, 2023, cash flow has been the most positive, what you call indication of our business. We generated net cash flow after meeting capex and after meeting all the working capital requirement of about 300 crore in 9 months period. And we have paid dividend, and then we have reduced borrowing. I think by March itself, March 24 itself, we'll have another reduction of 100-150 crores in borrowing. So next year we will be virtually debt free.
Okay, all right. Well, thanks a lot for joining in, and all the best in your journey to become debt free. All the best with the business as well. That's Alembic Pharma doing pretty well actually, up almost about 4% now at the 1,000 rupee mark.